so bright, it's hard to breathe, but that's alright. Hush. Take my eyes open to force reality. Why can't you just let me eat my weight in glee? I live inside my own world of make-believe. Kids screaming in their cradles, profanities. Some days I feel skinnier than all the other days. Sometimes I can't tell if my body belongs to me. I love everything. Fire spreading all around my room. My world's so bright, it's hard to breathe, but that's alright. Hush. I wanna taste your content, hold your breath and feel the tension. Devils hide behind redemption. Honesty is a one-way gate to hell. I wanna taste consumption, breathe faster to waste oxygen. Hear the children sing aloud. It's music till the wick burns out. Just wanna be carefree lately, yeah. Just kicking up daisies. Got one too many quarters in my pockets. Count 'em like the 4-leaf clovers in my locket. Untied laces, yeah. Just tripping on daydreams. Got dirty little lullabies playing on repeat. Might as well just ride around the nursery and count sheep.
What's up, guys? How is everybody doing? How is everybody doing? Give everyone a second. Give me a sound check. See what we got in the chat. Okay, we have a good amount of people in here. Hopefully everyone's doing well. That was an eventful past, I don't know, half a day so far. How many hours do we have left in the day? Let me double check. No, we're 3/4 of the way through. But yeah, what's going on, everybody? I'm gonna give everyone a minute to hop in. We'll get started. See who we have in the chat. What's going on, guys? Saab, Mr. K, Cornholio. Yeah, so the volume might be a little bit low. Let me just turn that up a little bit. I got rid of my last mic because it was causing too many issues. I didn't throw it away, but I have to figure it out separately from the stream. So, lack of energy in a Chinese mining company led to this. It didn't, Marcelo. People look for a narrative. In this case, there were more sellers than buyers. And I'll get into what the conditions were that set up for this kind of violent move. But it's not. After a move happens in traditional markets, in crypto, everyone needs to backfill some sort of story. And it's not something unique to markets. It's just unique to human beings in general. We like to fill in the gaps. And you can even see evidence in this. And when people actually tell stories where they don't have a complete story, they will just sort of fill in the gaps with something that makes them comfortable and fits, right? So people always look for a narrative. And in this case, the Chinese mining company is not the reason why Bitcoin dropped. Okay. Oh, is the music volume still on? It shouldn't be on. Hold on one second. Let me see. Music volume's off, right? Desktop audio's off. Sound is good, right? Okay. Yeah, no longer in the States. Thanks to crypto joining from an island. Nice. Yeah, I apologize about the volume being a little low, guys. I'm going to try to turn it up a little bit, but it was my microphone was causing too many issues the last couple streams, and I honestly didn't put in the time the last week to figure it out because I took a week off. And we'll get the stream started in a second, but I took a week off. Not like trading completely. I had a couple swings on. As you can see, I took nearly 100K loss yesterday. But I wasn't scalping really. Just a lot of stuff going on with my mother-in-law and her prognosis, and I needed a week. So anyway, okay, so this time is different. Yeah, our gap filled or not, telling different. Oh, crypto ed. All right, guys. So thank you for tuning in to the BlockRoots YouTube channel on behalf of my partner Josh Rager and I. My name is Kenneth Clark. So for those of you that are new, I want to thank you guys for tuning in. If you're not already a subscriber, make sure that you go ahead and hit the subscribe button. If you're in the stream right now and you're one of the, it looks like we have almost 100 people in the stream. If you're one of those people, go ahead and hit that like button. We appreciate when you hit the like button. We want to continue to bring you these videos. We do think that we bring a non-sensational approach to the crypto markets. Myself and my partner Josh Rager are full-time traders. We've been doing this for a very long time. I would say combined, when I think of it, we've probably been doing this combined over 20 years. So I've been trading now for 14 years. And I think Josh was trading a little bit before the crypto markets. So thank you guys for tuning in. As you can see, this stream is sponsored by our partners at Phemex. So one thing to note, Phemex did not have any downtime throughout this entire crash, right? I'll call it a crash. It was sort of like a flash crash. So they have spot trading, contract trading, and they have a yield generating program as well for USDT. So if you go to Phemex.trade, and you'll see that's going to be on the bottom right-hand corner of the screen. If you go to that link, you'll go ahead, moron. You will get access to whatever kind of promotion that they are running. And if you don't, kindly reach out to me and I will make sure that you do. Okay, so that being said, we're going to be talking about a couple things. One, we're going to talk about leading up to the move. So let me just go ahead and change the screen now. Again, for anyone who's new, you'll have to back it up. But we're going to talk about what led up to this. So, why conditions were, I want to say conditions they're more primed for this type of move on the weekend to begin with. And I've gone over this, I want to say ad nauseum at this point. But for anyone who's new, I think it's important to reiterate why things like this it's easier for them to happen on the weekends. What condition-wise, besides it being the weekend, what we were seeing in terms of market-generated information, or rather just levels of participation, right? So that is technically market-generated information. But what we were seeing, that is something that maybe we could look out for in the future. We'll talk about the positives, right? If there are any positives, we're weighing the pros and the cons. I think that we do have to call a spade and do have to acknowledge that market structure right now it's pretty ugly. But there are some positives that I think are worth going over and touching upon. In particular, how we dropped, the speed and velocity at which we dropped, intensity, magnitude, all of those things, they actually do matter when you're traveling from a distance into a level versus kind of cozying up to it over time. So positives, negatives, and then we'll get into the low time frames, where I'm looking in the next 24 hours, what levels I'm focused on, where I might be looking for some short-term opportunities to take advantage of, and that's it. And if you want to, after that, go over some charts, we'll take a look at some alts, we'll take a look at DeFi, because that obviously got hammered, and then we'll wrap it up. Hopefully this won't be too long of a stream. just to get a little bit of feedback right now, how does everybody feel? How does everybody feel about this? Are we bullish? Are we bearish? Are we confident? Do we think that the bear market is beginning and the bull market is over? How do we feel about it? So I'll just wait for some feedback. Nuke better than bleeding? Absolutely. So someone knows what I'm talking about. Bullish, okay. Bullish, all right. Okay. Bullish pullback. You know, I don't think that it's a bullish pullback, but I'd say that it's better than a different type of pullback we could have had. Shouldn't go lower, okay. Feels toppish, perfectly fine, par for the course. So I don't think it's exactly par for the course, you know, in the way that the course could have gone, rather. I think in terms of what our expectations should be moving forward, we should probably try to dampen the level of bullishness that we have in the short term. And the last couple of streams, if you guys have been following along for, you know, the stream I did a week ago, how I've been talking on Twitter, you know, there wasn't really a big reason to still be overly aggressive up at these highs, and to really continuously look for long opportunity after long opportunity and assume that every breakout was going to lead to a major continuation. You want to, right? Ultimately, that's what you want to see, because, you know, as when you're in new price discovery, and price discovery is kind of one of those things that is used improperly often, where price discovery is just value being developed. It's not like you're just constantly making a new all-time high. But when you do have a point that you're focusing on, such an all-time high that was really established like a week prior, that does become, to a lot of participants, a major contextual level. You know, as we continue to navigate and to establish new ground higher and higher up, you really can make an argument. And I don't think that you want to constantly I don't think that you want to continuously think this way and think that, you know, I could constantly say that this high is a good high to define risk off of in short. But the further up we go, right, without establishing any kind of major structure below, when we do see some signs like we saw preceding this, things that we pointed out in previous streams, you know, it puts you in a situation where you do have to assume at one point someone's going to get caught on the wrong side of the trade, right? And that's ultimately what we see. So I'm not bearish, but I think that it's important to be realistic and to say we've done a 10x from March. Market structure now is speaking pretty loudly in terms of, you know, we had a series of marginally higher highs and substantial pullbacks in between that period. So within a 2-month period, we had marginally higher highs. So from each high, it was a 5 to 7% rise, and the pullbacks were anywhere from 20 to 30%, I think. So, you know, you do the math. There's effort to the upside, but there's no follow through. So I think that, you know, just to get this out of the way, I think that we are in for a period where, you know, options writers would be happy to sell options, put it that way, right? Volatility will be happily sold. So leading up to this, first things first. I might have said that a few times, so this might be like third things third. But the weekends, they are thinner, right? Less participation. You know, it's a 24-hour market, so there is some tradition in markets by legacy participants who have come into the crypto markets. And, you know, it's not like all desks are going to be active on the weekends, even though you'd have to assume that some of them are going to be, right? If there's alpha to be had on the weekends, that's all this game is about. You know, they're not going to not man the computers because it's a Saturday or a Sunday. There is less participation overall, though, and we could see that. You could see that in terms of realized volatility, in terms of the levels of volume, weekends are thinner, right? Comparatively speaking, it's not like it tremendously drops off, but they are noticeably thinner. So in the weekends, it's easier to push the market around, right? And whether or not that is an actual concerted effort by an individual or a series of a group of individuals or whales, whatever, you know, you want to attribute to it, whether that is an actual voluntary action, right, an effort to push the market around, or whether or not the market just is easier to be pushed around through a series of accidents, and that's what you could call it, right? When the dominoes are sort of set up a certain way, and you have a little bit of movement that causes one cascade, and that leads into another cascade, and then on the weekends, that kind of activity happening, it could be drastically different and catastrophic versus something like the weekday, where you have maybe a little bit more of a thicker market overall. So weekends are thinner, right? Easier to push the market around. This goes back to FX trading. God, that's got such like a bad, it has, like you say FX traders now, and it used to be a respected profession, but investment banks, big desks trying to push the market around on the weekend to run stops, right? To run areas of pockets of liquidity, and to force players out of the market. So the weekends, it's easier for that to happen on the weekends, excuse me. Leading up to this, it's always my trading on the low time frame, on the high time frame. It's kind of like the approach is fractal in the sense that the things that I'm looking for on the high time frame are just larger examples of what I'm looking for on the low time frame, right? It's blown up. So we're looking for where we have a lot of effort coming into the market and not a lot of results. And the best way I could put that is by showing you, we could look at a chart of delta and see how aggressive buyers were. You could see over a span of time how, rates were very high, the interest rates were very high, borrow for upside capture is very high, funding is very high, basis is blown out. It's very difficult to time this though, right? Like you could see this you could see this go on and persist for weeks, for a month even. The way I like to look at this is when funding is very high, when basis is very wide and futures are trading at a substantial premium, and you're in this elated period, I don't want to say like, okay, this means that I'm going to sell. But I do say, all right, there are certain categories or certain environments that I'm going to be taking more risk in, and certain environments that I'm going to be a little bit more risk averse. And this is definitely one where, again, like I said, I wasn't really looking for the long constantly, as if this thing is just going to go up forever, right? So one thing that we noticed is that in terms of progress, right? So from a series of higher highs, right? That's all this YouTube is. It's a series of higher highs and higher lows. It's bullish, right? No, we have marginally higher highs, but actually we have a lot more participation behind each one of these highs. So if we just look at the last high, which is 5% higher in price action, in terms of levels of participation, we're looking at a threefold increase in open interest. So you're seeing an open interest increase that, excuse me, I'm going to be drinking some Perrier, 3 to 4 times greater, right? Depending on whether you're going from the bulk of where the activity came in or the wick. But what you're seeing is where there is an advance in price action, a large advance in open interest means a lot of participation behind this. A lot of players coming into the market, for good reason. It's worked up to this point, right? Breakouts work until they don't in this fashion, right? So we have a small increase in price action, a small advance in price rather, and we have a large amount of people that have come into the market after that. So all you really need to do at that point is when you see that you have, and this is constantly why I'll be anchoring VWAPs on. So you'll see me when we're looking at breakout trades, I'll put an anchored VWAP on. You see, okay, so this is the major contextual level everybody is focusing on, high time frame traders, low time frame traders, all of that. When we break that, I want to know where the risk is put on, because I certainly don't want to fucking trade below that, right? Excuse me. I don't want to trade below that risk. Once you start trading below that risk, then it's a matter of, well, how much risk are we talking about? Are we talking about, a small increase in open interest, or are we talking about a, $1 billion in notional value in terms of open interest, right? Are we talking about, in this case, 15% open interest for a 5% increase in price? So it just gives you an idea of what kind of fuel you're working with in the opposite direction if the market starts trading back against those participants. That's all that really is, right? It's, I call it a major contextual level. Some people call it inflection point, whatever. It's just an area market structure that a lot of people are agreeing on is an important level, right? 60K, so important. I was saying this, right? I was saying, hey, you break 60K, I think it's going to break easily up to 65. It took a little while, but sure enough, you break up to 65, no follow through, and if you start trading back below where that risk is put on, you're starting to put those people in a position of pain, right? And then they're not thinking of, I'll hang on. They're thinking, I'll get out and then I'll get back in, right? So that series of people acting in unison, it's never a good thing, right? It's not that simple, so that sounded rather stupid. But major contextual level, everyone's waiting for this level to break, pile in type of moment. And this is the kind of thing I look for on a tick chart, on a footprint chart, right? It's the same kind of behavior. Here's your level that you're focused on. Market trades through this level. Ton of activity comes in through this level, substantiated by open interest, by delta, whatever you want to look at. And in this case, the market is not able to hold that level, right? So it's a trap setup. So when you see this on the high time frame, though, obviously there's much graver implications for that than if you're looking at it on the low time frame, right? So we have that. So very high open interest. Another thing I want to talk about really quickly, and if you want to read a really great book, read The Rise of Carry. This has been a conversation a lot recently, and I talk about the basis trade, and I really wish that I took the basis trade. But the reason why the basis trade is not taken advantage of by a lot of people is because there's so much more yield to be had in the crypto market. So you have a basis trade that'll yield you a return over the next couple months that will probably beat every single hedge fund, right? It'll be 99% of hedge funds in traditional market space if you take advantage of the basis trade, right? When you see that futures are trading, we'll use a contract like, let's say, a September or a December contract, right? Trading at, let's say, it's 15-20% premium. I get delta neutral, I sell equal amount of futures, buy an equal amount of spot. No crazy aberrations, right? Market is going to meet the futures price over time, right? Those two are going to converge. Futures price and contango is going to roll down to the spot price. I'm going to capture that basis, right? So that is an amazing trade to begin with. There's a lot of different arb trades that are taken advantage of that are not necessarily directional. Okay, someone might be taking advantage of this type of trade, but without spot. They're thinking, well, spot, I could take 15% of the market, but what happens if I lever this whole trade up, right? I don't think that the market's going to go crazy. I don't think it's going to rip up. I don't think it's going to nuke down. I think both of these legs of the trade will work out just as it works out all the time, right? It's the closest thing to a risk-free trade. So what I'm going to do is I'm going to buy a perpetual swap instead of spot, okay? I'm going to lever up a perpetual swap, and then I'm going to sell those futures. Same amount of leverage, right? I'm going to represent the contract equally on both sides. And in this case, they are probably under collateralized, right? So in traditional markets, you saw this a lot. You saw these carry trades that offered yield to begin with, but there's not a whole lot of yield left in the market. In this case, there is because the crypto market is full of yield. But when there's not a whole lot of yield, people get greedy, right? And they're thinking, well, there's this much yield under normal conditions. What I'm going to do is just lever this up. And when you lever it up, one side gets blown out when something like this happens. And we saw, I think it was it like $56 million worth of $56 million position liquidated on Binance. I try not to get too caught up in the details afterward, but so there definitely were traders that were taking advantage of the fact that leverage is readily available to the extent that it is in crypto, which is 100 times. There were probably some trades that seemed safe beforehand, and you had the market that is levered up constantly. Market moves against you enough, cascades into a few stops or hits a few stops, cascades, and then one thing you go from a little pullback thinking that 60K is okay and everyone's on board with that, and then you're watching the show Hunters with your wife, which is a great show with Al Pacino, and you look back at the chart and it's down at, I don't remember when I looked at it, but I was down a considerable amount of money. So this there's a lot of reasons for this. I think that the positives, right? I don't think that, just to touch on this really quickly, I don't think that it's FUD from that treasury crap, because that was a weekend, right? I mean, it's on the weekend. Why would that be released on the weekend? Unknown sources, not really buying it. I can't really recall right off the top of my head, but I know that there are people that if I was to look on Twitter that are smarter than myself in this area. It's not my area of competence when it comes to regulatory shit, but I know that I saw a few people that I know them, I trust them as sources. I'm trying to think of like Jake Chervinsky or what might have been one of them. And even he said that it was suspicious. So I don't think it's that, right? The whole Chinese miners, whatever, I don't think it was that either, right? In this case, there was a lot of leverage in the market, and we saw it proceeding up to this point. And, it's a period where there's a ton of elation in the market overall. I mean, it has top vibes. I don't think it's a top though, but it does have top vibes. Definitely everyone was, I think I want to say that most people I know were on board with the market continuing to move up. So shame on us. Now, positives about this, right? We'll go over the negatives after, and then we'll get down to the low time frame stuff and where I'm looking. Positives about this, market moved down. I mean, just intensity and magnitude is the best way I could put it, right? Full of sound and fury. This was a very quick move. We're looking at a day that was, I think it was 14%, might have been 14, 15, 14.5%. And it did the majority of this move, in a matter of minutes, right? So a matter of minutes, it's like a Pareto distribution and activity of this day. You know, more than 80% of the move was done in 20% of the day. Well, obviously less in this case, but you see how that it's so skewed. So we have a very volatile, right, intense move vertically into a major level, right? So I am, you know, this is markets reward those who are willing to take risk, right? You want to assume that you will be benefited by taking a little bit more risk, right? As long as it's measured and it's in reasonable areas. So this is a higher time frame support. We're talking about it for a long time, 50,000 to 52. I think that it's important to zoom out of the chart and not get too hung up on just daily and weekly levels, because as you can see when you're looking at it, sort of the higher resolution chart, so there's activity to be seen within those wicks, right? So we talk about this by looking at the footprint when we go over the footprint chart and volume profile and all that shit. But this 50 to 52 level, you know, you can see that that was a fought over space, significant level, and we're returning back to that level vertically, right? So take out all the stops from here that we're sort of comfortably riding this trend, right, uninterrupted. You know, when you lose a major daily level, so when you lose a daily level like this, you know that you're going to run into a pocket of sellers, right? You're going to run into stops from longs that have been positioned and again have been sort of comfortable, you know, whether they're moving stops up or leaving their last stop up, thinking that, you know, this clearly has to be the safe stop because, you know, I am within a range at this point and this is a breakout. I think this is a good place to put a stop, yada, 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 from structure. And you run that major area, right? It's a daily level, and you cascade into a higher time frame level vertically. So positives, I know that sounds hard if you're a newer trader to be taken as a positive, but it is, right? This is an area where most people are going to want to step out of. This is an area where there was a lot of involuntary selling. When I just say that, I mean, you know, a bunch of stops that were placed, cascading. We aren't cozying up to this level, making everybody comfortable, right? Which is kind of the, you know, it would make you feel like that would be better, right? If it came up to your support and sort of drifted along it, but it came into it vertically. Okay, so that's the kind of thing that I like. There's a thing that a lot of people like. You know, you'll hear that from a lot of experienced traders. Vertically into a level, vertically down, vertically up. You know, I'm willing to sell the one that's vertically up, buy the one that's vertically down. Liquidations. That's another really important point as well. You know, we liquidated, I think, a record number of longs at this point. Now, liquidations, the thing about liquidations, right, and the thing about a major sell-off like this is that, and think about the market this way. When you're going into a major event like a Coinbase direct listing, right, the market is getting very long into that, months in advance, right? Markets are forward-looking, period. You know, equity market is looking out 3-5 years, not 3-5 months. So crypto markets is the same thing. They're less efficient, but we're all looking at something in the future. And at that point, a lot of things are sell the news. You know, unless it's a breaking news catalyst, you know, major macro event, fucking nuclear bomb. Most things are sell the news, right? Most things, when that period arrives, whether it's like a project release or something, you know, the market is going to be underwhelmed with the response after. A lot of people are going to be selling the market, period. A lot of the times you could just say, when things are known in advance, it's going to be a sell the news event, right? So in this case, when you think about everyone buying up to this period, right? The market is very bullish. You know, Coinbase went public, bull market, blah, 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 blah. When everyone is bullish and everyone is long, that means the market is full of sellers, right? Whether they're voluntarily, they're going to get out if the market moves against them, whether they have stops in. But when the market is long, the market is full of sellers. It's a very basic, you know, statement that I forgot who said it originally. Not like one person said it, but I think you understand what I'm saying. None of these like aphorisms and little pithy things that I have to say about the market are new, right? Nothing is new under the sun. So when the market is full of longs, right, it's full of sellers, future sellers. When it's full, when everyone is selling, right, it's full of future buyers. When everyone has sold, it's full of future buyers. So liquidations, the unique thing about that is when you have all these liquidations, they're put on the book initially as limit orders. So after that liquidation is done, there's like a gap in the book, right? It's a vacuum, so put it that way. So there is a gap, right? And then not only that, you have people on the sideline that were stopped out. So you have future buyers. So what it does is it sets up what can be a very swift move in the opposite direction because you have less friction and you have more participation, right? You know, this is under the assumption that people are going to just step back up to the plate, right? At some point, you leave without your money if you continue to do this. So we have a lot of sellers that are out of the market. So there should be less resistance now. I would say the path of least resistance now is back within this gap. I don't want to extrapolate it from there and say that it's going to go much further, because I plan on, barring any kind of major change, I plan on selling the return to that level. I plan on hedging the return to that level. And that's just for my own personal reasons. It's not because I'm not bullish on crypto in the long term. I just think that I'm better at timing the market than some people. And I think that we're going to range, right? So a lot of sellers out of the market. Another thing, last thing about this, which is a positive. It pays for you to understand what certain historical activity we've seen, right? I'm having a loss for words right now. It pays for you to know what the largest down days, the largest up days were in crypto, right? So you could say something like, okay, the last time that we dropped almost 20%, what was the activity there afterward, right? Do we normally see continuation, right? I'd say after a 10% move to the downside, I'd be less certain about mean reversion than I would on a 25%, right? So we're kind of in the sweet spot where I don't think it's necessarily that actionable yet, but I've said this many times before, after 30% pullbacks where I've literally came on the stream and, I always say none of this, and I should have fucking said this in the beginning, none of this is financial advice. I'll have to edit that. But I will say that if we experience a 30% drawdown, that I think that it's a better idea just to walk away from the computer than make any decisions. It might not happen in the 24 hours to follow. It might not happen in the couple days to follow. But more often than not, you're going to see the markets mean revert. And on balance of probabilities, and if you're just going off of historical activity, I know that's not a surefire thing, but a 30% drawdown, once you pass that 25% drawdown level, you're going to expect that the market will recover some of that ground, right? At least I will expect that, and I've seen that, we've seen that almost every time. So it never pays to sell support. All right. Dogecoin so Krebs Park, I don't know who the fuck you are, but I'm going to get you out of here because you're annoying. All right. So hide user. There we go. So we have a vertical move. We have a move that is well outside of, I say to just keep an eye on what historical activity was. All I'm really talking about is things that are outside the normal standard deviation of activity that we see. So this definitely was multiples is normal standard deviation of one intraday activity, and any kind of activity that we've seen in going back to, I would say, what was the last time we've had a major drop like this? Back in February, but this was a flash to the downside that I would say brings back March vibes. I don't even want to say that because it's not under the same context whatsoever, but I think you understand what I'm saying in terms of the intensity. So those are the positives, even though those sound somewhat negative. In terms of negatives, one thing that I think that you can't just stick your head in the sand about is that, in terms of market structure, you're going to see people come on the streams constantly and just say, we have a series of higher highs and higher lows, and hey man, this is a higher low. Well, at some point you have to say that the break in market structure, that the last higher low is the one that is preceding the break, the change from lower highs to lower lows, right? At some point, you're going to have the low that looks like it is still healthy, but is going to lead to the change. So you can't just say, oh, this is completely bullish still. I would say that you could say, well, it's not, it's not, we're not in a grave situation right now, but I'm probably going to be a little bit more neutral, right? I certainly don't want to just give allowance to any kind of downside activity and say, hey, as long as you don't really take out that low, like it's all good. Because this is a very substantial move to the downside. And I think that before that, right? So taking this out, I think before that it was worth paying attention just to the fact that progress was becoming less and less to the upside, and sellers were able to impose themselves still clearly without much problem to the downside, right? So buyers, marginally higher highs. Sellers, though, you're seeing that sellers are still continuously able to send the market in the opposite direction. Now, I mean, you flip the chart and you could kind of make, that same argument. Oh, buyers still continue to lift this up, but markets don't. There's a reason why the chart is this way, right? We're looking at an uptrend, not a trend that is easily just, we're just going to invert this to make ourselves feel better, right? So we're making less and less progress upward. In terms of what's taking place in the environment, we have a few things that if you study history might give you an indication that things are maybe going into a cool-off period. So I'm not bearish, but I'm definitely not overly bullish right now. So we have a break in the last all-time high. So continued progress clearly was lost. So lost the all-time high, lost the all-time highest close. This level was my most significant level. So let me just get this off. This level right here. So this shelf. So you can see that it's the point of control before all of this dump, right? So it's actually, if we just, what I'll do to show you, because this is included in the visual range now, so I don't want to backfit that perfectly and bullshit. So you can see that the point of control right there, and this whole daily shelf, right? You don't need to put on any fancy gadgets or fancy indicators. We can make this chart, naked. We'll get rid of that. So you have a naked chart, and you're just looking at, hey, what was fought over for a long time? So this was fought over for a long time as resistance, right? So a significant break in market structure was gaining that to the upside. So you definitely want to see that that is fought over in the same way on the return to that level. So we just took that out, right? Just blew right through it. So that was my most significant level. And really, I was saying, if we lose 59, we're going to 55, right? In this case, we obviously had a lot more follow through. So the significant levels right now, in terms of the higher time frame structure, we've lost this diagonal trend line support, but the thing about diagonals is you could draw a bunch of them on the chart right now, and you could easily tell a story about each one of them. But it is showing you this sort of rate of ascent over time, right? And I like to draw a few because it'll show you that I'm not just perfectly fitting this. You're seeing that no matter what, no matter how you cut this, this is sort of the rate of ascent of higher lows throughout this period. So we've drastically changed that. If you're looking at the structure on the higher time frame and you're looking at these three periods as a whole, what I would say about them is the same thing I would say if I was looking at them on the daily, right? This is now a bunch of value overlap. So it looks like it's setting up for ranging behavior, right? There's no way that I think that this is just going to continue to trend right now. And, it'd be a first. I mean, I wouldn't be surprised, honestly, but I don't think that that's what's going to happen. So we're accepted back within what was a major range before, right? So this level right here, this is a range down here. These areas, right, these low volume nodes are where price has been rejected, or rather where price did not spend too much time. So if we zoom out, right, just back up a little bit, this low volume node around 5250, that is a support. This level right below these lows, right, so right around 50,000, and then we're looking back down at the low 40Ks, right? So as long as this 52 down to 50K level does its job, right, we don't take that out, I think that we're going to be moving back up to this 58, 60 level. I think that this is going to be a good range to trade. I'll just put it that way. I don't want to say like this is onwards and upwards. I don't want to talk about 60K until it's actually on the chart, until we're above it. I'm just going to act like this is going into a much longer range over time, which I suspect that it will. If we lose this level, so I think that this is a major contextual level. I mean, I think a lot of people would probably agree. I think if we lose this low, and I'm talking about spend time below there, see no immediate response. I want to say that, I mean, there's a lot of people that when they talk about the chart, they're going to say like that it's very cut and dry. It isn't, right? Sometimes I make the mistake. I think we lost it and we didn't. I immediately, if I'm looking at this as a major level, I want to see that buyers are really concerned about buying it. So put it that way. I want to see that there's a sense of urgency below these lows. If we start falling back within here, this was a previous range, right? Previous area of a bunch of value overlap. What you likely do is just fall back into that same behavior. So it means you come back down to these lows over here in the low 40s. So right now, I'm just setting up within a range. I am not going to get, again, I'm only going to get excited about the higher time frame trend. And that sounds funny because I'm excited about trading this within a range, but I'm only going to get really bullish if we're back above 60. If we're back above here and this was sort of a deviation, yeah, it was a big washout, big fluke, big liquidity event, yeah, then I'll change my mind. But I will be selling this, right? So I will be selling this if I'm given the chance, right? If I see that buyers are getting crowded over here, funding is starting to tick up, I'm seeing the signs in Delta, for example, that I look for in levels of participation coming through this level and really not as much follow through. So a lot of things you could look at. If I see failure at this level, I'm going to take advantage of that, right? Because for me, above here is defining the other trade, right? So if I'm saying that this is a major contextual level, right? If I see that we're starting to mosey on around here and we don't see any kind of, it's hard to say because if let's say we come up to here and we're grinding against here for a while, that's different. if we return to this level like this, right, pretty vertically, chop around here, then I'll sell that. Because I'll sell that, I'll place a stop somewhere up here, 1 ATR, maybe a little bit less than one, maybe a 4-hour ATR, hourly ATR. And then at that point, if we're above this level, then my trade's wrong and whatever, right? But I think it's a good area to define a position. I think it's a good area to hedge. And then the lows, right? If we're looking at how these lows have been put in, and I'll go to, let me just make sure that, go to this on the low time frame. Make sure that this is still within the viewing space. So far, if we look at how the day has transpired, right, we have a few areas that I am paying a lot of attention to. So this gap, so this big inefficiency right here, price didn't really spend much time there. There should be not much friction to go back through there. So not a sticky point. Right, so if we are above 56.6, right, and I don't see an immediate response right at this level, and I'm talking like you're not likely going to get a lot of time to play. Right, if you see that you're above here and you're holding this, if I see that it's sold, right, if I'm looking at something like my footprint and I see that, for example, let me just get this in the viewing space, I see that we have something like this where there's a ton of selling at that level, we break above, we sell it hard, I'll buy. All right, I'll just buy, I'll take that trade because I think that you'll probably cover this pretty quickly. I'll probably front run my idea of where the exit would be from a technical standpoint because I don't want to be the last asshole to hold into the level thinking the full trade is going to be given. Could be wrong, right? Could be front run by other people thinking like that, but I think that this level should be covered pretty quickly if we gain acceptance within it. As far as the lows go right now, I do not believe that you get one and done. I think that you have a good area of single prints so far, so the market was rejected down here. Very obviously defined balance level. Point of control in the middle, nice distribution. But I would say that this 53 level, if we move back down here and reclaim 53.5, 53, if we get a wick into this single prints again, I'll look, my drawing is terrible, I will look to take this trade back up to 55, right around 55.5. I'm expecting mean reversion, right? I'm expecting mean reversion on a higher time frame sense overall, back up to right around 59, 58, maybe overthrow to 60. I'm expecting that maybe to take place over time. I'm expecting mean reversion overall in the lower time frames within this level. So I think that you range probably a day, 2 days, right after this. I think that you want to focus on your daily open, daily close, right? Daily high, daily open, daily close, right? So what I'll be doing if I'm looking for intraday trades, just some levels to really define, close out this level, right? So let's say we close today. We'll add some levels to our chart. Add the lows, right? We know that the single prints are going to be where your last 30-minute bar is and the wick, so single prints down here. Your close is this right around that point of control actually. So we have some good levels to focus on to look for that activity that sets up for trades in a low time frame. I wouldn't say to, personally, right, the advice that I'm willing to give is to not play with too much leverage, right? I would not play with any leverage, period. This to me is not, I'm not confident enough yet. I know that it's into this significant level, but I personally am just not confident enough yet. Does anyone have any questions? Let me get into the chat rather. Give you guys a second. Ray, I don't know. Ray, I'm sorry. I think Bitcoin is going to fade. Guys, XRP replace Bitcoin. Replace Bitcoin. Let's go to the chat real quick. Doge will hit $1 in 2 days. Good luck. Okay, what the fuck is this guy talking about? Is he a professional trader? No, Ray, you got me. I am a janitor at the local middle school. But I do like to trade in my spare time. He sounds like a newbie trader. Luigi Marco. Yeah. So, Ray, what are you talking about? Nice guys. Shark. Okay, it's too funny. Three drive reversal pattern. Okay. I love when people come in the chat and talk shit. If we go to the 40s, do you see major support levels? Yeah, I do. I actually do. You still bullish on Ave? Right now, Ave is looking ugly. I think that I'm bullish about what the market is showing me. So if we look at, for example, something like just a cross section of today's performance off the lows. One sec. So we're looking at Ave right now. Hold on, let me just change the chat. There we go. Ave off the lows, right? Ave off the lows, right? Let me just line this up perfectly. Ave looks good off the lows, right? Sol looks good off the lows. SXP looks good off the lows. Now, what I want to look for, and I've been looking at this now for the last couple months, is you want to see that there is a continued sign of strength, right? And it's not just a one-off, right? So, for example, why I am bullish on Solana. Well, every time that we've got a major dip, and I pull out this chart from the dip, Sol is always very quick to rebound, right? Sol is always quick to rebound, right? SNX was always quick to rebound. Ave is always quick to rebound. Sushi was always quick to rebound. SRM was always quick to rebound. So one thing that's persisting is clearly there is a survivor in all of these, and Sol is one of them. Ave is one of them. So yeah, I am still bullish on Ave. Yeah, I know. I think I'm back. You got it. Awesome talk. Why is it, wait, guys, why is there so many shit talkers in the chart right now? I know why there is. So we'll talk to you guys real quick. It sucks losing money. I get it. You guys are fucking pissed. I lost in my swing trade. I made a little bit of it back, but I lost almost 6 figures, right? That's in one swing trade. My portfolio down over 7 figures. So I know what it's like to lose. That being said, I don't think that it is a good idea for anyone just to go in a chat and take it out on other people, right? You want to talk about professional trading, if I was to get all high and mighty right now, I'd probably say a few other things, but I'm trying to take the high road. So I understand it sucks when the market drops, but this is the time where you don't make any rash decisions, right? Don't try to make it all back. I understand what it's like to be salty. I was salty myself about 14, 13 years ago when I started too. But yeah, don't come in here and insult me. This is pretty even keeled for how I normally would deal with things. So let's just be nice. They are salty. Of course they're salty. Yeah, I don't, as far as, so when I look at this structure, hold on, let me just get back to this. So as far as BTC goes, and this, I know this is a lot of leeway to give it. I think that the last significant weekly low is down here in the 40s, right? I don't want to say, so here's the thing. It's not binary, okay? There is no, for one, there is, and maybe this will be a lesson for those that are insulting me in the chat. There is no objective definition of a bear market. Okay, the transition to a bear market be defined by many different people in many different ways. Some people will say in equity markets that it's a 20% decline. Some people will say that it is falling under the 200 period moving average. Some people will say it's falling under the 20 weekly moving average, right? We fall under the 20 daily moving average. It's a good tool to see where you are in relation to the trend, what the speed of the trend is. Some people will say you have to lose weekly market structure. There's no single agreed upon thing that people will say is the sole definition of a bear market. A lot of times you're defining it after you're fucked for a really long time, right? You're saying in hindsight, yeah, fuck, we're in a bear market. As far as market structure goes, I put more emphasis on market structure and shifting my bias as that changes, right? So if we lose, for example, this weekly low, right, 44.8, I think that we have support in the low 40s. Right, but I'm definitely not going to be a blind bull at these levels, right? I'm not going to be a blind bull. I mean that I need to see that a certain amount of price action develops at these levels. You're not going to be just seeing a 5-minute candle come into 40K and think that that's the best dip to buy, right? I need to see something develop, right? I need to see a sign of strength, right? So as long as we hold this weekly structure and we don't have any kind of drastic change to this, I don't think that we're going to do anything more than go into a larger range, right? I think one thing that crypto has maybe what it's done is before this current macro environment where we've had larger players come in, it's been very easy to assume that you have a one-way ticket up. Once you lose that, it just becomes a one-way ticket all the way back down. I think that we do have the same type of reasonable support that you might find in larger cap equities as well. Excuse me, in larger cap equities right now, where you'll find more bid support at these significant levels, right? Where maybe this takes a lot longer to go up than maybe people expect. And I think that that's something that has been the case in markets for a really long time. People are sometimes they're right about the direction, right? They're wrong about the timing, they're right about direction, wrong about the magnitude, right? So I don't think that I don't think it's smart to just start thinking that we're in a bear market well in advance of anything major changing. Right? What we've changed right now is, I would say, kind of local. And yeah, it doesn't. I think it's a reason to now not be just blindly bullish, right? But you have to be able to switch from being very bullish, putting your foot on the gas, to being more neutral, being more cautious. And really, what it comes down to is you have to protect your capital, right? Um, Risk management, something that is just parroted too often with really not much depth behind it. But you need to protect the house, right? So when are you going to be a risk taker? When are you going to be, when are you going to be putting up the the lines of defense? So I think that it pays to be a little bit more defensive right now. I could be wrong, right? This could be a great dip buying opportunity, and I could be looked back on as not being bullish enough at this opportunity. But I really don't. I don't care, honestly. I don't care. So let's see. Does anyone have anything else in the chat? Yeah, I don't think I'm feeding into the trolls. I think that, yeah, I don't think I'm feeding into the trolls. So, let's see, more chat. $20x long XRP. So for new traders, I tell my best friends, right, just get exposure. I've had a lot of friends come to me lately and they want to learn how to trade because I'm a trader. So I tell them just to get exposure. You don't want to be trying to constantly time the market. You need time in the market. So I told a friend yesterday, I went out to lunch with him, and he's actually a broker. So I went out to lunch with him, and we talked about the market for a really long time, and I said, dude, don't, I know you've been in markets forever, but you're not a trader. So I said, just get in. And I don't know the market. We were talking about Aave. So for example, we were talking about Aave. I said, Aave, $500. Aave could be 300 tomorrow, right? And where is Aave now that I say that? I'm thinking, where was it yesterday and where was it? Where is it now? So yeah, Aave yesterday it was in the 400s, but I said, hey, it could be 300 tomorrow. That worked out. So I said, I have I think Aave is promising though, right? So for you, I wouldn't try to trade Aave, right? He's like, oh, Aave moves more. He understands the concept of beta. And he said, oh, it moves more. I could probably just trade Aave. And I'm thinking, you have no idea what you're doing right now. And you're talking about trading. Just get exposure. Right? So that's what I tell a lot of people right now. Looking for a legit question. Scroll up to my previous. Let's see. Intro Moto. Where's your question, buddy? So any thoughts on the duration of this potential range based on historical examples? Just licking my finger and putting it up in the wind. Just as a reminder, markets trend less than they do range. So this is a really long trend, right? And we can't, I know that part of this is outside of the last all-time high, and people are treating it like that's the trend. This has been in a really strong trend from March, right? We came off of March being in the 3,000s, right? So this has been in the wheels have been in motion for a really long time. Markets range majority of the time, right? You'll see people say 60% of the time ranging, 40% of the time trending. like, who knows if that you could even back that up empirically to a specific amount, right? That's not unique to certain markets, right? With the benefit of hindsight. But this is a really strong trend over time, and now it looks like it's beginning to tail off. And if I was going to say what type of range I would expect, so as you guys might remember, I've been saying that the end of April and May was an area that I would be expecting a pullback to occur, rather a time period I would be expecting a pullback to occur. You hear the phrase sell in May and go away. It's actually not the case in equity markets. It's more like sell in April. So there's a few things that I think were working against us. I think that traditionally you see that kind of behavior in legacy markets. I think you have more legacy participation now. Taxes, you can't discount those. People had an additional month to file taxes, and I think that a lot of people are realizing now that they owe a lot of money and are going to be taking profit, or we're taking profit based on that. So that might already be priced in. But again, I assume that I said that quarter two would probably not be favorable. So, if you're technically looking at quarter two, you got quarter one that's up until March, right? Quarter two, April, May, June. And then maybe July and August, we start to really take off again into quarter three, right? This is all just like, this doesn't do anything for your trading though, right? I'm not going to be pinning that on my wall and making decisions based on that. It's just what you do, right? You just try to make your best guess. The levels are the levels, right? If something drastically changes before that, I'm not going to be hanging on to what my idea is of, my thesis. My original thesis was that, we're going to be crappy for Q2, and here we are at 65, and I'm still maintaining that bias, right? Because I assume that the top's going to come again. So yeah. So when did the bull market start? It's a secular bull market going all the way back to 2012. I mean, when did the bull market start? I think that by most people's account, and I think that you have to go by majority of people, right? Wisdom of the masses, or wisdom of the crowds in markets, because you have a lot of people acting on behalf of these levels. So the most significant change, right, in the last year has been the break of the all-time high. I think that that's clear. That was, by all means, right, the most significant level, one of the most significant levels on the chart. Let me go back to the chart. So that was one of the most significant levels on the chart. And even though we made a really significant high conviction move 2020 March, all the way up into then, I think that really things changed for everybody. They could all agree on it, right, when the all-time high was broken. So I don't think that this is some super cycle. I don't believe in that. It's a weird thing that's taken place in the last couple of months when people make a lot of money, they get really philosophical, and they just get outside of what I think their observable norms are up to that point. And I just see some of that where people are like, yes, this is like the second coming of, I don't even know, right? Not to get into religion, but they glorify this, right? And I think that it ends up making them make more emotional decisions, or let them be prone to that type of decision making, and see things not as objectively as I think they are. And I think the one thing is that markets, no matter what, nothing is new under the sun, and that all markets do move within cycles, and that this is just going to be a cycle, right? I think that this is the beginning of larger adoption. So we're definitely at a different place than the equity markets are. At scale, it's a $2 trillion market cap. The market cap of Apple is, you're right around that. So one of the single largest stocks is let's just get a exact. Why do we even try to guess when we have the internet? Apple market cap. It's like you're trying to prove something to yourself by guessing something, but you have Google right there. So the market cap of Apple, 2.25 trillion, right? The market cap of cryptocurrency as a whole, 2 trillion. So a single stock, right? The entire crypto market fits within that. A lot of it's garbage though, right? So yeah. So I think it's going to be, I honestly don't think, so put it this way, I don't think there's a lot left. I think more of, how do I say this sentence properly? I think I think the majority of it is honestly in the rear view. So I think that we put in a majority of the leg. So what that to me means is that we're not going to 200K in this cycle. I just don't see that happening, right? I don't see that happening. I see that we consolidate, we go up to maybe 100, 80 plus to 100. I don't know. I could be completely wrong, right? Like, what does it matter? At the end of the day, what the market does is what matters, not what I think. I'm just one person. But I don't think that you sustain this type of behavior for a very long time. So, and this, if I could tell you one thing right now in this stream that you might not hear in a lot of other streams, it's that if you want to perform well in markets, then maybe it's not your best bet to pick up a book on markets, right? Or if you are, maybe pick a book on markets. It's like more of a macro book on markets, sort of like, let's see, what is a good book on markets? The Alchemy of Finance. Another good book on markets, The Devil Take the Hindmost, right? Another good book on markets. There's a recent one that I just picked up, but I can't think of it right now. Fuck, what is it called? I just picked it up on Amazon. It's not delivered yet. And I know because everyone quotes this book, but my point is, it's not a book that's going to teach you technical analysis. The best book for you as a participant in the long run are actually history books. So study history. If you want to do well in markets, study history and study psychology. I'm getting hung up on that book that I just got, so hold on one second because I have to find out now. Where is it? I just got it. Give me one second. Lords of Finance, excuse me. Lords of Finance. But if you want to do well in markets, study history, study psychology, right? That's all markets are. There's some of their parts, right? And their parts are people, right? Human behavior moves the market. Does anyone have any alts that we want me to take a look at? Let's go to the chat. Yeah, I mean, I appreciate that. Handled it with grace and style. Yeah, I used to say back in the day, if I have a hater, I'll just come to New York and I'll take you out to dinner and we could go on a horseback riding trip and we could smooth this out. And I don't mean that in any kind of ugly way. I mean, like, I'm not sitting here bullshitting you. So, you don't talk a lot about Ethereum. Yeah, you're right. Honestly, I do often leave shrooms. I was reading someone's comment on shroom. I do often leave streams forgetting to touch on Ethereum. So Ethereum, significant levels with Ethereum are still being held, right? So in terms of like the same kind of levels that we're looking at with BTC, major contextual level, support, and it's still acting as resistance right now. Do I think that ETH holds this level? I don't know, but so far it is. Right, so when people are asking, I assume they think if I think the low is in. I think with ETH, it's actually at a better level than BTC, right? And there's been sort of this conversation of whether or not ETH is lagging or leading BTC in the cycle. So I don't know. I mean, honestly, ETH is still at, so if you look at where ETH is on the high time frame, ETH is still at its all-time high, basically. Right? It hasn't really gone too far from this level, and I think maybe a mistake might be thinking that it has to, right? Because BTC did, and ETH is higher beta. And a lot of it comes down to the timing of the overall market, right? If the market says sit down, it's time to sit down, right? And you can't just run off on your own. We don't see that kind of idiosyncratic behavior yet. You get pops up in things like Sol and Dogecoin held up, but that doesn't usually sustain. So ETH does look good right now so far. I can't say anything negative about it. I will say that the significant drop for ETH would probably come if you lost this 2000 level, right? Because this was a range on the higher time frame going back to the beginning of 2021, right? Going back to January, just broke outside of this to the upside beginning of April, end of March, and this is your mean reverting rotational behavior. This should be a major change in market structure that leads to continuation of the upside. If you fall back within this range, you're probably just going to start mean reverting again and getting accepted back where you were very comfortably accepted prior. So value was established here for 3 months, right? So if we look at this fixed range, value area high, value area low, if you start falling back below this level, you're probably going to cover the entirety of the range. So that might sound scary, but you break 2,000 and you're not able to hold that level, I think you do come back down to 15. So, but it just happens to be that ETH is holding its last level. Okay. Cake is, let's see. I don't know anything about Kava as a project. So when it comes to DeFi, I think DeFi is kind of in its own beginning of its own Gartner hype cycle. So 2017, 2018, enterprise blockchain shit, a ton of promise, bunch of white papers, no products yet. Okay, DeFi has products. So DeFi actually has working things. So there is I guess, a more substantiated case to be made for DeFi being a little bit further along and not just being vaporware. But I do think that the DeFi narrative, while it is very useful to take advantage of, I do think that it is very overvalued right now. I think that value will probably be siphoned out of things and accrue to the more to the winners in the space, similar to the same sort of behavior you saw in the internet bubble, where most of the value had found its way into things that did have long-term promise and did have, the concept is that over time fundamentals do win. So that's why I do think that things like, I think Solana, I think Aave, I think I still am bullish on a lot of the DEXs, right? I think that anything related to FTX, there's certain things that I do think that are clear. I think that they're not winners, but they're the better horses in the race right now. But I think the majority of DeFi has deflied itself away from proper valuations. Let's see. What do we got? Just going through the chat. BSC bags. So some of my BSC bags, I do have some bags that I don't really care about because they're not substantial enough in my portfolio to be meaningful for this type of correction, right? So they've gone down a lot, but they're weighed properly in terms of portfolio allocation. So I don't really care about anything Binance Smart Chain related. It's not doing anything to hurt me right now. Let's see. What do we want to look at? Some of you guys are sharing tickers. Cake. I want to look at Cake because I added to Cake before the dump and got dumped on. So most significant level right now, acted as support. So you've seen many charts in this cycle start from here, right? Listing, big dump, long accumulation period, high volume bottom. It's sort of like an Adam and Eve, but I don't like to call it by anything. It's really just high volatility followed by a dampening of volatility, round out, markup, retest, right? And you have this retest right now. You got a cup and handle there. You got an Adam and Eve, pattern traders in glory right now, right? This level right now is technically, for me, higher time frame support that has to hold, right? If we start falling back below 18, start losing 18 on the daily, I don't know. I don't know if I would want to be in this. Technically, this is, moved against one of my last entries, but I'm still up. Not pretty, but as long as it's holding this level, I'm not too worried. Higher beta, right? So BTC moves down, ETH moves down, your higher beta stuff moves down much more. The problem with Cake, so you might look at this as a problem or a promise, is that Cake is actually lagging in the recovery out of the low. So Cake is actually one of the worst performing ones out of the low. So go back to this low. What's going on? All right. That's the low anchored to the right. So just making sure I get it on the right part of the axis. There we go. Wait, where? Right there. Okay. So Cake is, as you can see, out of all the DeFi ones I have on this chart, is the worst performing one. So out of the low, not too well. Whereas, again, there are certain leaders off of the lows, and you want to be sort of keeping note of what is consistently. That being said, I think that this is something that I'm not too worried about. I think the cake eventually mean reverts and catches up. So I think that it closes this odd gap right now, right? So this relationship I think is a little bit out of sync. I think the cake has been showing signs of strength up until this point. I think that in terms of cake fundamentally, right, as much as you can say that, just look at the TVL and the amount of volume the cake does. So pancake swap rather. So there are a lot of people using this platform, right? People might argue that it's CZ related and, you know, volume is conflated or whatever, but yeah, I don't want to be that. What is that? Oh, it's my anchor. It's my standard deviation bands for VWAP. I don't want to start going down that route. I think that a lot of Binance Smart Chain projects are compelling. So I think the cake is. I think put it this way. I'm not getting out of it. Let's see. Rune, clear leader this entire bull market. Rune and Sol, both of them. What's going on? Why is it like that? Oh, there we go. So Rune and Sol, both of them are awesome off the lows. In terms of what you would want to see off the low, this kind of ridiculous one-sided response, right? Probe into the lows, immediately bought back up. You know, paying attention to lower time frames like this, you might miss that looking at them on the daily, but that is a significant sign of demand. You know, and that's what happens with assets that are trending very strongly. Buyers, you know, don't get a chance to get in. So with Rune, right? I don't think that. I think the danger is assuming that it can just continue like this up from here. But that being said, it's not doing anything yet to say anything to the contrary, right? I don't think that it's broken anything in terms of market structure. Excuse me. It's not doing anything but continuously holding market structure, so it looks good. I say that with a little bit of hesitation because I know that eventually things always look good before they look bad, right? And BTC right now I think is probably the thing you have to focus most on. Safe Moon. You spam the chat too much. I don't look at the chart. So let's see. Yeah. So what else do we have? Let me just look at the chat again. Yeah, people are salty today. I've never had someone come on. I've never had anyone really come in the stream and try to talk shit. I get it's the internet, but I promise you that I'm probably much bigger than all of you. I say that just knowing a little bit of statistics. All right, so Cosmos. So if you got something to say, you better be doing your deadlifts. All right, so Cosmos. Looks like Cosmos still range bound, right? Cosmos looked like it was ready to mark up, but Cosmos back to being range bound. So what I'm saying is, you know, this entire range right here going back to February. We haven't lost it to the downside yet. We've obviously tested the support again, but I can't get bearish on Cosmos until we lose the range, right? And I'm not even talking about being bearish on it, right? As long as Cosmos holds this gap, which is ultimately that $16 level is right before that, you know, that precipice. As long as that gap is held, right, the gap is being held, right? We're still within a range. Cosmos looks similar to this. Sol even looks like that, right? Still within a range, right? So it's not like we've lost market structure more recently or more locally, rather. Same thing. So if you look at, we'll just put on the daily profiles. Rather, no, what we'll do is we'll put on the profile for this period right here. Right back within the value area. So in a very comfortable spot, very accepted, rejected downside, right? Rejected at the upside, but back within a range. So I think your levels for Cosmos are back above that 24 level. So back above this little high volume node. These highs. If you're back above here after this, it's probably lights out. Sellers didn't do their job, right? After you have a major, if you have a range like this, inverse works to the downside. Hold on one sec. Have a range like this, cleanly defined high, break above, fail to hold, break down. If you're ripped right back up here, right? Let's say that we're right back above 24, back above where most of the value had accrued over time. Clearly sellers at this point, if they're still in position, they're probably in a position of covering. Anyone who's sold right now is in a position of maybe getting back in. It's at that point, it just looks very bullish if you're back above the top side of that. Bottom is held so far though, so not a whole lot to say, honestly. Yeah, I am. I was drinking Perrier during the stream, and I just had a little bit go down the wrong pipe. And when you have a little bit of liquid go down the wrong pipe, and you try to like walk it off, but it's in your lung, and you have to cough it out. You try to keep it cool, like when you're in a restaurant or in public. You're doing those like things, and it's just not coming out, so you have to literally go to the bathroom and cough the fuck out of yourself. ENJ, let's look at ENJ. And I'm probably going to wrap it up soon, guys. Strong trend, value overlap up over here. My daily levels are where though? ENJ looks like same sort of thing that happened with Cosmos and a bunch of other pairs, right? You had what looked like the range and flag developing before a move to the upside. You got your move to the upside and failed to hold, and now you're back within a range. So as long as we hold, we're above that 180 level, $2 180 level, we're not falling back within this range. I don't want to start extrapolating with alts and start saying that because we've failed to break to the upside, we have to come all the way back to the downside. Just current context, current conditions are you're back within a range. I'll look at Wi-Fi, and then I'm probably going to wrap it up, guys. So Wi-Fi actually looks pretty nice. And it's not beautiful, but in terms of the, I guess, level of strength we're seeing at this level, that sounds silly. I shouldn't have got rid of the box, so let's go back. Why did I delete my drawings to begin with? I want to get rid of this, and I want to get rid of this. What's going on? Hold on. There we go. The level that I was most focused on is this level right here. So this for me is a pretty significant flip, and over time the type of activity we've had coming up to this sort of slow grind and slow upwards accumulation, right? Boring price action, that to me is bullish when you're coming back to a major level like this, right? Major level within market structure. So for me and for a lot of people, this flipped my bias on Wi-Fi, right? For scalpers, that level becomes important. Now for swing traders and position traders, this becomes a significant change. So the idea is like you have a lot more flows to fade now because you're changing the market, you're changing the structure in a pretty drastic way. As long as this, I said 43, I had bids down at 43, and I think these were already filled either way. They were filled earlier before this, before today. But as long as that 43 level holds, right? It's kind of more like 42. But as look at this, right? Don't get hung up on the exact level. It's not a line. It's not a perfect line. As long as this level holds and we're not doing something like this, then I'm not concerned. It looks good. And I think a lot of people are essentially short on Wi-Fi, not actually outright in terms of delta, but by being underexposed to it because it's just kind of fell off and became something that was in the background. So I think that if you start marking up and doing something like this, I think that it's gonna become obvious to everybody that this is maybe a shift in momentum, right? The beginning of a momentum trade. And I'll look at Badger, and that's it, guys. Whoa. Yeah. All right. Okay, so if I was looking at Badger before all this, the level that I would have wanted to hold, right? Is there a longer term chart, or is this all we got? Is Badger that new? Because the last thing I want to do is start talking about it, and meanwhile it's got a whole bunch of structure to the left, and I'm making a whole case like an idiot about 30 days worth of data. Yeah, and it goes all the way back. So where are we listed? Let's put on a longer term. All right, so it's on Binance recently. Let's put on Badger. All right. That might be the longer term chart. Nope, it's not. Sometimes Binance has the USD equivalent and it's longer term. What's going on? Who will be? All right, there we go. Okay. Well, there are certainly levels that you don't want to lose, and we happen to be right near them right now, and it happens to be very ugly too. So this right now, equal lows, lower highs on the weekly, not pretty, right? Obvious daily level, right? What it would have been likely interpreted by many as an accumulation zone, right? So I don't know why I put the inflection on that zone like that, but if you lose this now, right? If you lose 34 and you don't see an immediate response, you're looking at 27 initially, but there's a big gap down here, right? And in a bull market, right, as the market is moving up and everything looks healthy, if we lose this, I'm kind of anticipating this, right? If things are really beginning to look ugly and maybe we're going into a longer term range and you lose this, I'm expecting that the rest of the market helps this move down. So Badger doesn't really look too good, honestly. This, if you want to take a long off of this, you have to remember that I'm going to give you my opinion, but there is a case to be made by someone to say that this is a good trade to take because, hey, you're down at the lows. It's a good area to find risk, What did I just say? I just said that the lows are what you wouldn't want to lose. So let's just say even if we went outside of the lowest low, right, what do we have that might be setting up? Theoretically, I don't use the RR tool except for the occasional Twitter post, so excuse me, I gotta get it. So let's say that you're looking for a long off of this level, and yeah, you've been ranging for over a month, right? Establishing value within this greater area, something like this. So value area low, value area high around 48. Why not take a long off of this low? It's worked so far. Vertical into it, so yeah, there is actually more of a case, right, if I'm going off of what I'm saying and not being contradictory. So vertically into this level, inefficiency right there, could define a position below there. So what does that leave us with? Leaves us with a trade that is, it's attractive from a risk reward standpoint, right? Even if we go, you still have a 2-to-1 before, front running and going into these lows right here. So yeah, there actually is a case to be made for taking a trade right here. I just don't like the way the chart looks. Like, it's one thing to say, yeah, support is support, but it's another to say that the fifth test is support, that, multiple tests is still, you have to imagine over time it's that demand is weakening. But until it breaks, right? Define it as an attractive trade. It looks attractive from that standpoint. So, all right, guys, I think that is it, though. It's been, we are into this for an hour and a half. I will share more of my sub $100 million market cap projects on Twitter. I don't like sharing them too often because they're easy to move, and I do have positions in small caps, and I don't want it to be interpreted as me trying to like fill before shill. So I think in best practice, it's always good to not talk about certain projects that I'm in, but there are things that I do find very interesting, and it's not like I don't want to talk about them, But yeah, I'll if you DM me, I'll gladly share you some projects that I'm interested in, and that I have, not just that I have financial interest in. Put it that way. So, everyone have a fantastic evening. To my friends who talk shit, I wish that you guys make your money back that you lost. Yeah, I know it's got to be a shitty day for a lot of people. Everyone have a fantastic day. Take care.